this is a problem where we are going to do the ratios relating to Cosmos Limited. That is, the company name is given. The gross profit ratio is 50%, 15%. Stock velocity 6 months. Debtors velocity 3 months. Creditors velocity 3 months. Gross profit for the year ending 31st December 2012 amounted to 60,000 and closing stock is equal to opening stock. So it's a very simple problem. He's asking you all to just calculate sales, closing stock, sundry debtors and sundry creditors. So first point, you have to make a point that where he had given gross profit. What is the gross profit amount? Gross profit is how much? Yes, gross profit is how much? Anyone please answer?
60,000.
Yes, very good. Gross profit is 60,000. What is the rate of gross profit?
15%.
So with this information, what we can calculate?
Sales.
Very good. From sales and gross profit, what is the other information you can
Cost
calculate?
of goods sold.
Very good. It's clear for you all. So first, what we are going to do, we are going to calculate the sales. A bit is asking us to calculate the sales. Already I shared the problems with you all also. So we have to calculate the sales. So this is the solution. So solution, what we are going to do, calculate the sales. Calculation of sales. Clear? So what is the formula? What is the information he had given? He had given gross profit, isn't it? He gave gross profit rupees 60,000 and rate of gross profit is given. Rate of gross profit is equal to, what is the amount? 15%. 15%. What is the formula for rate of gross profit? Rate of GP is equal to gross profit divided by sales into 100, isn't it? This is the rate of gross profit. So you know the rate of gross profit is equal to 15. Gross profit is how much? 60,000 divided by X. That is, I'll write sales only. Sales into 100. So calculate. So sales is equal to 60,000 into 100 divided by 50 is equal to how much? Calculate.
4 lakh.
Yes, sales is equal to 4 lakhs. Someone doubt? Any doubt, ma? Someone had a doubt? No one. So this is the sales where we got. Next, what is the information we can find out? Cost of goods sold, isn't it? Cost of goods sold is equal to sales minus
Gross profit.
very good. Gross profit is equal to cost of goods sold. So cost of goods sold is equal to sales is equal to 4 lakhs minus gross profit is 60,000. 3 lakhs.
3,40,000.
40,000. So we got the cost of goods sold also. So first part is clear for you all. Now next, what he had given, stock velocity, debtors velocity, creditors velocity is given in months. Is nothing but stock velocity is nothing but conversion period. Usually conversion period we calculate for days. What is the formula for average conversion period? For stock, you are converting the stock into cost of goods sold, isn't it? Material to be converted into finished goods.
365 divided.
Yes, where we are going to take 365 days. So what is the formula we are going to follow? Average conversion period is equal to, do you remember? Conversion period is equal to 365 divided by stock turnover. This is a formula we are going to use, isn't it? Yes or no? Do you remember? For datas, what we are going to do, after calculating data's turnover, we used to calculate average collection period. Means how many days, within how many days you are going to collect the amount from datas. When it is stock to be converted into finished goods, isn't it? Within how many days you are going to convert the stock into finished goods. That is nothing but conversion period. For creditors, what is the payment period? Within how many days where you are going in a year, within how many days where you are making the payment. So this velocity, stock velocity, data's velocity and creditors velocity is nothing but stock velocity is the conversion period, data's velocity is your collection period, and creditors velocity is nothing but your payment period. So here he had given in months. So here also in a year, how many months will be having?
12.
12 months. So instead of 365, where we are going to take 12. Is it clear? Because in the question, he had given months. So naturally months only we have to take. Days, months. So average conversion period, as he had given months, we are also going to take months. 12 by stock turnover. So what is your conversion period he had given? Conversion period, stock velocity is equal to 6 months. So 6 is equal to 12 divided by X. We do not know, isn't it? You do not know the stock turnover. Do you know the stock turnover? We do not know the stock turnover. Oh yeah, I'll write stock turnover divided by stock turnover. Is it clear for you all? So now we'll calculate stock turnover is equal to stock turnover is equal to 12 divided by 6 is equal to 2 times. Anyone having any doubt? Any doubt? Is it clear for you all?
Ma'am, explain once again.
Now, this conversion period, did you follow?
Yes, ma'am.
What do you mean by conversion period? Where we are giving the period, means this particular stock, within how many days you are able to convert stock into finished goods. That is nothing but your conversion period. What is the formula we are going to follow? Conversion period, very simple. That is usually 365, where we are going to take. In a year, we have 365 days. So 365 divided by stock turnover. Clear? But in our problem, he had given stock velocity, he had given for 6 months. Stock velocity he had given for 6 months. So here also we are, instead of 365, we are going to take months. That is, in a year we have 12 months. So we had taken, instead of 365, we had taken 12. What is the formula? Divided by stock turnover, isn't it? Now we do not know the stock turnover. So we are calculating the stock turnover. You know the average conversion period is 6 months, is telling, is equal to 12 divided by stock turnover. We do not know the stock turnover, isn't it? Stock turnover ratio. So where we are going to calculate stock turnover ratio is equal to 12 by 6 is equal to 2 times. With this information, we are finding out stock turnover ratio. What is your stock turnover ratio? 2 times. Is it clear for you all now?
Yes, ma'am.
Okay. Now, the next. What is the formula for stock turnover? What is the formula for stock turnover when you want to calculate stock turnover ratio? When you want to calculate stock turnover ratio, what is the formula we follow? Cost of goods sold divided by average stock. Isn't it? Stock turnover is equal to cost of goods sold by average stock. Now you know stock turnover, isn't it? We got stock turnover, isn't it? 2 times he had given. Stock, we know stock turnover. We know stock turnover, isn't it? You know cost of goods sold also. We know cost of goods sold also, isn't it?
Yes, ma'am.
Cost of goods sold also, you know, cost of goods sold is how much? Cost of goods sold is,
3,40,000.
yes, 3,40,000. Stock turnover is how much? Stock turnover is 2 times. So you know stock turnover, you know cost of goods sold. So stock turnover 2 is equal to cost of goods sold is how much?
3,40,000.
3,40,000 divided by average stock. With this formula where you are going to find out average stock. Average stock is equal to average stock is equal to 3,40,000 3,40,000 divided by 2 is equal to how much you're getting?
1,70,000.
Very good. 1,70,000. So how do you get average stock? Average stock is equal to opening stock plus closing stock divided by 2. This is your average stock, isn't it? Opening stock plus closing stock divided by 2. Now, what he mentioned in the problem where he mentioned, check the problem. Uh, Closing stock is equal to opening stock. So, average stock is how much? 1,70,000. 1,70,000 is equal to opening stock and closing stock are the same, he's saying. So when your opening stock is 1,70,000, your closing stock also will be the same, divided by 2. How much you're getting? 1,70,000 plus 1,70,000 divided by 2, where you'll be getting 1,70,000, isn't it? When opening stock is X, your closing stock is also X. If your opening stock is 1,70,000, your closing stock is also 1,70,000. So 1,70,000 plus 1,70,000, how much you are getting? 1, 2, 3. 3,40,000 divided by 2. Are you getting 1,70,000?
Yes, ma'am.
Got it? So what he mentioned in the problem, closing stock is equal to opening stock. Is the same. Whatever opening stock is there, closing stock is also the same. So therefore, closing stock is equal to, now in our problem, he's asking us to calculate the closing stock. So closing stock is equal to 1,70,000. Anyone having any doubt? Any doubt in this? Opening stock is equal to closing stock. That is the reason I took opening, whatever average stock I'm getting. Opening stock, I'm assuming the 1,70,000, and closing stock also, I'm assuming 1,70,000. So how do you calculate average stock? Opening plus closing divided by 2, where you get the average stock. So directly you're getting this answer when you calculate. When you calculate, you're getting the average stock of 1,70,000. Anyone having any doubt here? Is it clear? If you're not following, you can tell me, ma. You can ask me. Yes, everyone followed or not? Any doubt? Students, are you having any doubt?
No, ma'am.
Okay, so we'll go with the next bit. Next is calculating the sundry datas. So, what he had given, sundry datas, how you are going to find out? From data's turnover, isn't it? Data's turnover. What is the formula for data's turnover? Data's turnover is equal to sales, where you are going to take credit
Credit
sales,
sales by
average,
closing the data.
yes, average or closing datas, isn't it? Depending on the information. Now, here in this problem, I think we cannot calculate the average datas because he had not given any opening data. So, here we'll take datas, closing datas. By closing datas. By closing datas. Now, the information you have sales, isn't it? We are having sales. Sales is there, isn't it? But are you having the datas? We do not know datas. Do you know data's turnover? We do not know data's turnover. So, where we are going to find out data's turnover, isn't it? Where we can find out missing information is in the now missing information is data's turnover and closing datas. Yes or no? These two information are not available to us in this problem. Only where you have sales. So how do you find out? By this equation, any one missing information we can find out. Sales by closing datas, you get data's turnover. Or if you know data's turnover sales, we can find out closing datas, isn't it? So data's turnover is not given, closing datas is also not given. So what we are going to do with the given information, he had given data's velocity is 3 months. With this information, where we can find out data's velocity is equal to 3 months. With this information, where we can find out data's turnover. With this information, we can find out data's turnover. We can find out with this information, we can find out data's turnover. So, what is the formula for data's velocity? Data's velocity is nothing but average collection period is equal to how many months he had given? 3 months. This is the information he had given. So, what is the formula for average collection period? As he had given in months, where you are going to take in months only. In a year, we have 12 months divided by data's turnover. Is it clear for you all? Average collection period is equal to 12 divided by data's turnover. This is the formula. So you know the average collection period. Average collection period is equal to how many months? 3 months is equal to 12 divided by data's turnover. So I'm sorry. Data's turnover. Data's turnover. Data's turnover is equal to how much you're getting data's turnover? 4 times, I think. 12 divided by 3 fours are 12 is equal to 4 times. This is your data's turnover. Now you apply the formula. The same formula where you can apply data's turnover. is equal to sales by closing datas. So data's turnover, how much we got? 4 times is equal to sales is how much? Sales is 4 lakhs. 4 lakhs divided by closing datas. Closing datas. So closing datas is equal to closing datas is equal to 4 lakhs divided by 4 is equal to 1 lakh. Closing datas is equal to 1 lakh. Anyone having any doubt? Please respond.
No, ma'am.
Finished? Now next what we have to do? Sales over, closing stock over, sundry datas over. Now we have to find out sundry creditors. Sundry creditors also same thing. First creditors turnover, isn't it? Creditors. Sundry datas you can find out from creditors turnover. Creditors turnover, what is the formula you're going to have? Purchases. Purchases divided by closing creditors. Purchases divided by closing creditors. Now, do you have purchases? We do not know purchases, isn't it? Purchases is given in the problem? No, purchases is not given in the problem. But what is the equation you are going to follow? Purchases is not given in the problem. So we have to find out purchases with this equation. With this equation. Okay. What is the equation we follow, ma? Opening stock plus purchases minus closing stock is equal to cost of goods sold. Isn't it? Do you know opening stock? Yes, opening stock is 1,70,000, closing stock is also 1,70,000. So 1,70,000 plus x minus 1,70,000 1,70,000 is equal to cost of goods sold is how much? 3,40,000. Find out the equation, find out purchases and tell me. Find out purchases and tell me.
Three lakhs 40,000.
Purchases 3,40,000. One lakh 70,000 to be added, 1,70,000 to be deducted. Ultimately, it will be now we got purchases. Now next, what we do? Creditors turnover. Do you know? We have to find out creditors turnover. One with English, we got purchases. Now we have to find out Clear? So what is the formula? Creditor's velocity is nothing but average. What do you say? Payment period. There we have taken collection period on no. Payment period is equal to 12. Creditor's velocity, how much? How many months? No? Creditor's velocity?
4.
3 months. 3 only, no?
Yes, ma'am.
3 months. So 12. Average payment period will be 12 divided by creditor's turnover. Creditor's turnover. So average payment period he had given 3 months. 3 is equal to 12 divided by X. Huh? X, or you can say creditors. Isn't it? X is nothing but your creditors turnover. Creditors turnover is equal to creditors turnover is equal to 12 divided by 3 is equal to 4 only. Even this you got 4 times. Now we can calculate the creditors turnover by applying the formula. This is the formula. So what is creditors turnover? Creditors turnover is equal to 4 is equal to purchases how much? 3,40,000 divided by closing creditors. Divided by closing creditors. So closing creditors is equal to how much you are getting? 3,40,000
85,000.
is equal to 85,000. Oh, yeah. 85,000. I think we got everything. Sales, closing stocks, sundry debtors, sundry creditors. In this way, you have to find out. Is it clear? You may get such type of problems now. I'll just give 2 minutes, complete. Over. Followed, ma? No. We'll do the next problem. Problem number 5 also shared with you all. Anyone read the problem? CR is nothing but your current ratio. QR is nothing but your quick ratio. Quick ratio is also known as acid test ratio. It is also known as liquid ratio. Clear? Now these are the ratios where he had given proprietary ratio, current ratio, quick ratio. Proprietary ratio, what is the formula he followed? Fixed assets by proprietor funds. Clear? If your fixed assets are 0.75, your proprietor funds will be 1. That is the equation. So working capital is 60,000, reserves and surplus 40,000, bank overdraft 10,000. There are no long-term liabilities and fictitious assets. So this is the information where he had given. So from current ratio, how do you get current ratio? Current assets by current liabilities. How do you get quick ratio? Quick assets by current liabilities. Quick assets is equal to from current assets. If you deduct stock, where you're going to get the quick assets, isn't it? But here in this problem, either you know the current assets or quick assets or current liabilities. So how can you find out current assets and current liabilities? But one information where he had given working capital is 60,000. So with this information where we can find out current assets and current liabilities. Current assets and current liabilities. So current ratio given is how much? Current ratio
2.5.
2.5 is to 1. Means what? When your current assets are 2.5, your current liabilities will be 1. Clear? Then your quick assets is equal to, or how much you have given? Quick assets
1.5.
1.5. Now we'll take the formula. Current ratio is equal to current assets divided by current liabilities. This is the ratio you're going to follow. Quick ratio is, what is the formula you're going to follow? Quick assets divided by current liabilities. This is the formula. Now, this only you know current ratio, but you do not know current assets, you do not know current liabilities, you do not know quick assets, you do not know current liabilities. So we cannot, though you know CR and QR, but we cannot find out CA and QA because we do not know both assets and also the liabilities. So how do you find out? Only one information he had given, that is working capital. So what is, how do you get working capital? Working capital is equal to, working capital is equal to current assets minus current assets minus current liabilities. Current working capital is equal to current assets minus current liabilities. So your working capital is equal to 60,000 he had given, isn't it? 60,000 is equal to, what will be your current assets? If your current liabilities are X,
2.5x.
for example, if your, yes, so it will be 2.5x minus X, isn't it? You're assuming current liabilities as X. So now you solve the equation. This is the equation where you're going to solve 60,000 is equal to, we'll go slowly only, 2.5x minus x, which comes to 1.5x. I think this point is clear. Therefore, x is equal to x. X is nothing but your current liabilities, isn't it? X is nothing but your current liabilities. So x will be how much? X is equal to 60,000 divided by 1.5 is equal to how much?
40,000.
How much you're getting?
40,000.
Very good. So this 40,000 is nothing but your current liabilities. Current liabilities are 40,000. So what will be your current assets? Current assets will be
1 lakh.
yes 40,000. 2.5, isn't it? Directly you can multiply. 2.5 is equal to how much? 1 lakh. Huh?
Yes, ma'am.
Okay. Current assets is equal to 40,000 into 2.5 is equal to 1 lakh. So you got current assets, you got current liabilities. Current assets minus quick assets. When next we can find out quick assets, isn't it? Quick ratio is, what is your quick ratio? Ratio is equal to quick assets divided by current liabilities. Clear? And now you know quick ratio. What is your quick ratio? 1.5. Isn't it, ma? 1.5 is your quick ratio. We do not know quick assets, but you know current liabilities. Current liabilities are how much? 40,000. So with this information, where you can find out quick assets. Quick assets is equal to 40,000 into 1.5 is equal to how much?
60,000.
60,000.
How much? 60.
60,000.
Okay. 60,000, correct. Then comes stock, you can find out, isn't it? Current assets minus quick assets is equal to stock, isn't it? So, current assets are how much? 1 lakh minus your quick assets are 60,000 is equal to 40,000. 40,000 is what? Therefore, stock is equal to, therefore, stock is equal to 40,000. Here, so we got current assets, we got current liabilities. In current assets, we were also able to calculate what is stock. Here, so he's asking you all to find out as many information as possible to make a statement of proprietor's fund with as many details as possible. So from this information, current ratio and quick ratio, where we got current assets, current liabilities, and we also found out your stock. In current liabilities, total current liabilities are how much? 40,000. In 40,000, 10,000 will be your bank overdraft. Clear? Then he had given proprietary ratio is equal to fixed assets divided by proprietor funds. Now there are no long-term liabilities and fictitious assets. So what is the equation you are going to follow here? In the problem he mentioned there are no long-term. This is the information he had given, isn't it? This is the information he had given. There are no long-term liabilities and fictitious assets. So what will be your accounting equation? Usually shareholders funds, isn't it? Shareholders funds plus long-term liabilities, that is your current liability, non-current liabilities, plus current liabilities is equal to total assets. Total assets will be how much? Fixed assets plus current assets. No fictitious assets, he said. ASS. Fictitious assets. Now we do not know what is the long-term liabilities is 0. He says no. Then current liabilities are how much? Current liabilities are that given the amount, isn't it? Current liabilities. How much we got? 40,000. 40,000 only current liabilities? Yes. 40,000 is equal to, we do not know fixed assets. But what he had given in the ratio, see here, proprietor ratio, fixed assets by proprietor funds. Means if your fixed assets are 0.75, your proprietor funds will be X. So if your fixed assets are 0.75x, your shareholders funds will be x, plus fictitious assets he says 0. So with this equation we are going to find out. Is it clear for you all?
Ma'am, if
Total.
there is no long-term liabilities and fictitious assets, we have to use this formula.
What he mentioned, no, what he mentioned, you find out as many details as possible. And he had given fixed assets. This is the information he had given. First thing is we got current assets and current liabilities.
Yes.
In the balance sheet. Balance sheet, how do you prepare the balance sheet? I'll just show you all. This is the balance sheet. Liability side, what all you are going to take? Isn't it?
Yes.
Then you take non
Current
current
liabilities,
liabilities, that is nothing but your long term.
long-term liabilities,
Then we take current liability,
current
isn't it?
liabilities.
Where you get the total. Total LIBIL. Isn't it? On the asset side, what you have? All your non-current assets. That is your fixed assets, isn't it? Then you
Yes,
have
ma'am.
all your investments, all your non-current assets. Then you have current assets, isn't it? Non-current assets. Then you have current assets. Fictitious assets also sometimes if he gives, isn't it? It is not compulsory.
Okay, ma'am.
It is not compulsory, fictitious assets, where you get total assets, isn't it? So he specifically mentioned what he had given. He says that fictitious, there are no fictitious assets. So fictitious assets are 0. Current assets is equal to how much? Where we got current assets are how much, ma?
1 lakh.
I had not taken 1 lakh. Okay, your current assets are 1 lakh. Huh? You fixed assets, do you know the fixed assets? No, as per the equation, he had given 0.75. If your fixed assets are 0.75, your shareholders' funds will be 1. That is, we assume that shareholders' funds is X. Then your fixed assets will be 0.75x. Okay, shareholders funds are x 1 is nothing but, yeah, we are assuming that it is x. Long term liabilities is say nil, means 0. Clear? Current liabilities is how much?
40,000.
Current liability 40,000. Now you apply the equation. The same thing what we are doing, we are putting in an equation form, because total assets is equal to total liabilities. It should be the same, isn't it? Total assets to be equal to total assets. So here we are following the equation. Now you find out the shareholders funds. Apply the equation and find out the shareholders funds. All x will bring to one side. Clear? 0.75x. Already you have x here only, isn't it? X plus, when it comes this side, it is minus 0.75x is equal to, I think you all are very comfortable with your mathematics, 1 lakh. From here, if it goes there, it becomes minus, so 40,000. Another table, x minus 0.75x, I think you'll be getting 0.25x. Am I
Yes,
correct?
ma'am.
is equal to 1 lakh minus 40,000, which comes to 60,000. So x is equal to, Helma, x is equal to 60,000 multiplied by 0.25, isn't it? So how much you're getting? 60,000 into 0.25. Yo. 60,000 divided by 0.25. 2 lakhs 40,000 you're getting. X is equal to 60,000 divided by 0.25. Hello? Hello? హలో ప్రణీత్, నేను క్లాస్లో ఉన్నా. అయ్యో, నేనే చేస్తా, ఇప్పుడే చేస్తా. బాయ్ బాయ్. షేర్ హోల్డర్స్ ఫండ్స్. Shareholders funds is equal to 2,40,000. Shareholders funds is equal to 2,40,000. Then what will be your fixed assets? Fixed assets will be how much it was? 0.75, isn't it? So in 2,40,000, 0.75 will be how much? 1,80,000 will be your fixed assets. Yeah, same thing, you can put it here. Shareholders funds. Shareholders funds. I'll just this is the balance sheet. So shareholders funds, how much we got? Oh, no. Wait. Insert column to the left. Then here, insert column to the left. So I'll take this. Paste. Paste. Okay. Now fixed assets, how much we got, ma? Fixed assets are 1,80,000. Fixed assets are 1,80,000. Then current assets. In current assets are 1 lakh. In current assets, what information we got? Where we got only stock. In current assets, stock is how much? 40,000. Stock 40,000. Other current assets will be 60,000. For total, we have taken to the outer column 1 lakh. Fictitious assets 0. nil. Okay. Shareholders funds are how much? Shareholders funds are how much we got shareholders funds? 2,40,000. 2,40,000. In that, what he had given? Reserves and surplus. So first in shareholders funds you have share capital, and he had given reserves and surplus. Reserves and surplus. Mm, Reserves and surplus in the problem, how much he had given? 40,000. Reserves and surplus 40,000. Share capital will be how much? 2 lakhs. So 2 lakhs plus 40,000, 2 lakhs 40,000. And long term liability, he say nil. Current liabilities are 40,000. So in current liabilities, bank overdraft, bank OD is how much? 10,000 he had given. So other current liabilities will be 40,000, no? 30,000. So your total liabilities are how much? 2,80,000. Here on the asset side also we got the same thing, 2,80,000. In this way you are going to prepare the balance sheet. Is it clear? In this way where you are going to prepare the balance sheet. Anyone having any doubt? I think with this we can stop our revision class. Anyone having any doubt for this? Are you copying down? This is the equation only. I put it in the balance sheet format T shape, and I'm showing same equation where we solved and we found out shareholders funds and the fixed assets. Clear? Any doubts, ma? Is it clear? Shall I close?